Now, for our next topic, we will be talking about share splits and stock rights. Share splits occur when the investee calls in issued shares and replaces them with new shares, normally for a large number of shares but with corresponding reduction in value. Share splits could be split up or split down. So a share split up happens when the old shares are replaced with a larger number of new shares with a corresponding decrease in a par value. For example, a shareholder owns original 10,000 shares and there is a split up 5 for 1. So this means that for every one existing share, it will be replaced with 5 shares because of a split up. So from 10,000 shares, it will become 50,000 shares. A split down happens when the old shares are replaced with a smaller number of shares with a corresponding increase in the par value. So still the shareholder owns 10,000 shares and there's a split down of 5 for 1. So this would be divided by 5. So from 10,000, it will become 2,000 shares. So this is a split down because from 10,000, it is replaced with a lesser or smaller number of shares, which is 2,000 shares. So what would be the accounting treatment for share splits? If the share split is received from an investment measured at fair value, any change in fair value brought about by the split in the shares is recognized as unrealized gain or loss in either FVPL or FVOCI, or profit or loss, or the OCI. If the share split is received from an investment in an quoted equity securities, then only memo entry is recorded. So for example, a shareholder owns 10,000 shares costing 2 million pesos. The shareholder receives a notice, a split 2 for 1. So the receipt of the new shares will be recorded as a memo entry. So that would be for every 1 share, it will be converted to 2 shares. So there would be 20,000 new shares as a result of a 2 for 1 split of 10,000 original shares. We also have special assessments. So these are additional capital contribution of the shareholders. These are considered as additional cost of investment on the part of the shareholders and a share premium on the part of the entity. Example, a shareholder owns 10,000 shares costing 500,000 pesos. The directors pass a resolution to the effect that the shareholders shall contribute 5 pesos for each share held to the corporation. So the entry would be investment in equity securities and credit cash. So that's 5 pesos times 10,000 shares that the shareholder owns. So since this is additional capital contribution, that will be a debit to the investment and credit to cash. Then we have stock rights. So this is a legal right granted to shareholders to subscribe for new shares issued by a corporation at a specified price during a definite period. So these stock rights are evidenced by share warrants. The share warrant states the number of shares and the price that the holder can purchase. Normally, if there's one stock, there's also one share warrant or one share right. The stock rights could be rights on, or they could also be X rights. So shares are selling rights on after the date of declaration but before the date of record. So in between the date of declaration and the date of record, these are rights on. This means that the shares are sold together with the stock rights and the buyer is entitled to the stock rights attached to the share. So this means that when these shares are sold to a buyer, yung buyer meron na siyang right to purchase a certain number of shares as a result of the stock right. If the shares are sold after the date of record but before the date of expiration, these are called as shares which are having X rights. So this means that the shares are sold separately from the stock rights and the seller is entitled to the stock rights even if the shares are sold. Okay? So again, yung pagkakaiba ng dalawa is kung napapasa pa ba yung stock rights or hindi. If the shares ay nabenta between the declaration date and between the date of record, pagkabili ng buyer ng shares, kasama na doon yung stock rights. And since nabili na ni buyer yung stock rights, si buyer ngayon ang may right to subscribe or purchase new shares. Pero pag nabili ni buyer yung shares as X rights, wala siyang opportunity to buy new shares as a result of the stock rights kasi hindi naman niya yon nabili. Okay? Hindi kasama sa nabili. Okay? So, si seller pa rin ang entitled for the stock rights. Okay? So, the stock rights depends if the shares related to that are accounted for at FVPL or if these are accounted for at cost. So we have here a comparison of the journal entries for each of the case. Example, ABC Company holds 12,000 shares of XYZ as an investment in Equity Securities. On March 31, ABC received 12,000 stock rights to subscribe for new shares at 6 pesos per share for every 4 rights held. Okay, so what does this information mean? So, si ABC, may-ari siya ng investment sa XYZ. Si ABC, ang natanggap niya is 12,000 rights. Okay, in the absence of any stipulation to the contrary, it is presumed that the number of shares you have is also yung number ng stock rights mo. So, since 12,000 yung number of shares niya, so meron siyang 12,000 stock rights. Again, in the absence of any stipulation to the contrary. Because if given naman dyan na may 100,000 stock rights siya, kahit 12,000 lang ang shares niya, so meaning yung stock rights niya is really 100,000. Pero pag walang given, gagamitin mo yung number of shares na pagmamay-ari ng shareholder or ng investor. So, going back, ano yung gamit ng stock rights? So, binibigyan ng right, karapatan si shareholder na bumili ng bagong shares at may designated na price. So, parang may special offer price sa kanya yung company. Pero, meron rin siyang certain duration para ma-exercise siya. So, this time, binibenta yung shares. Pag binili niya, mabibili niya for 6 pesos per share. Ano ang kailangan para makabili ng isang share? So, kailangan niya ng 4 rights. Okay? So, if we're going to calculate, so sa 12,000 stock rights niya, i-divide mo siya ng 4. So, ilang shares yung pwede niyang bilhin? So, sa 12,000 niya, 12,000 divided by 4, so meron siyang pwedeng mabili na 3,000 shares all in all. Okay? So, how do we record this one? So, first is if the stock rights are accounted for at FVPL. So, assume the shares are measured at FVOCI. So, ang investment ni shareholder ni ABC Company ay classified at FVOCI and the stock right, ang fair value niya is 2 pesos. So, to record the stock rights, you debit investment in stock rights at FVPL 24,000 and credit unrealized gain, profit or loss. That's equal to 12,000 times 2 pesos na fair value. On April 16, 4,000 stock rights were exercise. So, out of the 12,000, yung 4,000 lang yung ginamit niya. So, remember na hindi ibig sabihin na 4,000 yung stock rights na nagamit or na-exercise, 4,000 din yung number of shares. Hindi. Remember na ilan yung kailangan para makabili ng isang shares, kailangan ng 4. So, therefore, yung 4,000, i-divide natin by 4. So, ang number of shares lang na pwedeng mabili pag in-exercise yung 1,000 is only, yung 4,000 is only 1,000 shares. Ulitin ko, dahil 4,000 yung in-exercise niya, i-divide mo siya ng 4 kasi kailangan ng 4 na rights for 1 share. So, 4,000 divided by 4, meron lang tayong 1,000 shares na pwedeng bilhin at 6 pesos. So, that's why, that's 6 pesos times the 1,000 shares. So, that is 6,000 pesos. So, the value of the new investment is 6,000 and then credit cash 6,000. And since ginamit na natin yung stock rights, kailangan nating i-reverse yung entry. Equivalent lang dun sa nagamit na stock rights. So, that's debit unrealized loss. That would be profit or loss. And credit investment in stock rights, FVPL. So, saan natin kinuha yung 8,000? So, pwedeng yung shortcut is fraction natin yung amount. So, di ba, ang total ng lahat-lahat ng stock rights, originally, yung 12,000 is 24,000. So, since 4,000 yung nagamit, so, get the fraction, 4,000 over 12,000, and i-multiply sa 24,000. So, you will get 8,000 pesos. Kung gusto natin yung mataas na proseso, pwedeng ganito. 24,000, i-divide mo siya by 12,000 shares. 12,000 stock rights. And then yung answer doon, makukuha mo yung per stock right. Okay? So, 24,000 divided by 12,000 stock rights, that would be 2 pesos. Then, 2 pesos times yung 4,000 shares na ginamit. So, that's 8,000. Pero mas mahaba yun, yung proseso. Okay? On April 29, yung 5,000 stock rights were sold. So, imbes na gamitin para bumili ng bagong shares, binenta niya sa iba. Okay? So, ang proceeds niya would be 5,000 times 150. That's 7,500. So, debit cash, 7,500. And first credit yung value ng stock rights na binenta. So, since 5,000 yun, so 24,000 times 5,000 over 12,000, that's 10,000 pesos. Again, if you want the longer way, diba yung lahat ng stock rights, 24,000 divided by lahat ng stock rights na 12,000 units. So, tag 2 pesos pala yung value kada stock rights. So, since yung binenta is 5,000, so 2 pesos times 5,000 is 10,000 pesos. And hindi magbabalance yung debit at credit. So, may balancing figure sa debit side. So, that would be loss on sale of stock rights. On May 1, dahil hindi naman niya ginamit, hindi niya binenta, na-expire na lang yung stock rights. So, record the loss on expiration of stock rights, 6,000 and credit investment in stock rights at FVPL. So, paano siya kinompute? So, yung original is 24,000, di ba? Minus yung nagamit na 8,000, minus yung binenta na 10,000. So, may iwan na lang ay 6,000 pesos. What if yung stock rights, they are measured at cost? So, memo entry lang yung gagawin for the recognition of the stock rights. Not totally recognition, you just record it lang pala. So, debit received 12,000 stock rights from investment in XYZ, incorporated shares to subscribe for new shares at 6 pesos per share for every 4 rights received. So, on April 16, observe yung difference ng dalawa. Ang difference nila is yung account title kasi this time at cost, yung kanina is FVOCI. Yun lang yung difference. Another is wala nang unrealized loss kasi wala naman tayong ni-record na previously unrealized gain. Wala rin tayong investment in stock rights at FVPL. So, yun lang yung entry. Ito lang yung magiging entry. Okay? Next, on April 29, So, mag-debit ng cash, 7,500, and just credit investment in equity securities at cost. Okay? So, yun lang yung magiging entry niya. And then, yung expiration niya, so just record the memo entry. So, you have the remaining 3,000 stock rights received from the investments have expired. So, yung main talaga na difference nila is yung memo niya, yung memo entry, at saka every time na may binibenta or may in-exercise. Okay? So, kasi dito sa at cost, wala siyang unrealized gain or unrealized loss. Okay? How do we determine the fair value of the stock rights? So, may tinatawag na theoretical value, which will be discussed in the second part. Pero yung una is, usually this is the practical way to get the value of the stock rights. You get the difference between the market value of the share right on, yung with the rights, at yung market value ng X right, yung walang right. So, naturally, kung ito merong rights, ito walang rights, so yung difference nila would have been the assumed fair value of the stock rights. Okay? So, for example, yung market value ng shares, pag may rights is 120, pero pag wala namang rights is 100, so naturally, yung 20 pesos na difference, parang yun yung kanyang value ng stock rights. So, ganun yung unang step. The second one is parity value. So, ito number 2 to number 2. Okay. This is the parity value or the theoretical value. So, meron siyang formula. So, una, kung X right siya, so market value of share X right minus subscription price. Ano nga uli yung subscription price? Magkano yung pwede mong magkano yung value per share pag binili mo? Magkano yung magagastos mo pag bumili ka ng isang share? And then, number of rights needed to purchase one share. Yun yung denominator. Pag rights on naman siya, same lang siya, share, market value of shares, pero rights on, minus subscription price, pero yung denominator yung magkaiba. The number of shares plus 1. Okay? Then we also have investment in bonds with detachable warrants. This time, this is for debt securities. Meron siyang detachable warrants. So, detachable, so pwede siyang matanggal. Okay? So, example, ABC Company acquired investment in bonds with detachable warrants of 1,050,000. So, ano yung gamit nung detachable warrant? So, ano mangyayari pag may detachable warrant? So, if there is a bond investment with detachable warrants, there are two instruments, yung bonds at saka yung warrants. Okay? So, the bonds are the debt instruments while the detachable warrants are equity instruments. Okay? So, bakit equity instrument siya? Kasi, pwede siyang ma-convert into shares. Okay? So, pag na-exercise mo yung warrants, pwede siyang maging shares of stocks. Remember na pag investment in bonds, hindi tayo owner ng company, di ba? Ano tayo? Tayo ay nagsisilbing provider of finance kasi yung investment natin is in a form of bonds. So, on the other side, dun sa binigyan natin ng investment, binigyan natin ng pera for investment, ang i-record kasi nila is bonds payable. So, ang ating treatment is creditor, para siyang creditor, in substance, creditor-debtor relationship. Pero in paper, it's an investment. Okay? So, again, pag may warrant siya, pwedeng ma-convert yung warrants into shares of stock. So, pwede tayong maging owner ng company. Pwede tayong maging shareholder ng company once na-convert yung warrants into shares. Again, originally, ang role natin is provider of capital in terms of bonds. nag-invest tayo. So, 'di ba, utang siya on the part of the investee. Pero sa atin, it's an investment. But then again, ang substance talaga, yung relationship natin is creditor, debtor. Kasi yung other party magbabayad sa atin for the principal and the interest. Okay? And once meron siyang warrants, this will give us a chance to become a shareholder. So this becomes an investment in equity security. So again, yung value niya is 1,050,000. Ang face amount is 1 million. Kung walang warrants, it's only 950,000. Pag may warrants, 1,050,000. So the detachable warrants have a fair value of 100,000. Okay, the business model requires that debt instruments will be measured at amortized cost and the equity instruments at fair value. Okay, so the entry would be investment in bonds, 950,000, investment in share warrants at FVPL, 100,000, then credit cash, 1,050,000. Assume that the detachable warrants are subsequently sold for 120,000 pesos. Binenta yung warrants. So, debit yung proceeds, 120,000 pesos, and credit investment in share warrants at FVPL, 100,000 and gain on sale. So, sorry, dito yan siya. Dapat 100,000 dito. Okay? So, dahil yung worth lang ng warrants is only 100, pero na-receive natin is 120,000, so may gain na 20,000. Same given everything. Pero assume that these are exercised. Ano yung exercise? Ginamit natin yung warrants. Bumili tayo ng new shares for 1 million pesos and these are classified as held for trading. So, the entry would be that bumili tayo ng shares gamit yung warrants. This is held for trading securities and then credit cash. Now, we have an equity instrument. Previously, meron tayong debt instrument. Now, because we exercise the warrants, we now have an equity instrument. So, ang investment natin is in the form of shares. Next is you have to close your investment in share warrants kasi ginamit natin. So, debit loss on the recognition of asset. And then, credit investment in share warrants at FVPL. Assume naman if the detachable warrants expired, hindi natin ginamit, hindi rin natin binenta. So, just close the investment in share warrants and then debit loss on expiration of share warrants. Okay, so that's the end of our slides. So I hope you have learned something about share splits. You have assessments, and we also have the stock rights and detachable warrants.